According to the Competition Commission, 28 banks, including 5 South African banks, are accused of manipulating the dollar-rand trades.
The Competition Commission has reached a settlement agreement with the UK-based Standard Chartered Bank for manipulating the rand-dollar exchanges. Now, the bank has admitted liability for manipulating the US dollar and the rand from 2007 to 2013.
17 minutes past 7 o'clock, and the British multinational bank Standard Chartered has admitted to its role in manipulating the rand-dollar exchange rate and has agreed to pay an admin penalty of 42.7 million rand, ending roughly 8 years of litigation with South Africa's competition officials.
The case relates to allegations of collusion to fix prices and divide markets in respect of the dollar-rand currency pair dating back to 2017. The Commission found that the banks directly and indirectly manipulated trade of the USD-ZAR currency pair in relation to bids, offers, bid-offer spreads, the spot exchange rates, and the terms and/or margin of executing clients' orders at the fix. It also alleged that the banks had divided the markets by allocating customers in the USD-ZAR currency pair. The Competition Commission has filed a new charge sheet against the banks accused of manipulating the USD-ZAR currency pair trading after the Competition Appeal Court dismissed their failed appeal in February. The banks must file their answers to these charges, which have now been further substantiated. The case is ongoing and the banks have yet to be held accountable. In layman's terms, the banks are accused of working together to manipulate the exchange rates between the USD and South African rand. This means that they may have artificially increased or decreased the value of the rand to benefit themselves. The Competition Commission is investigating these allegations and has filed charges against the banks involved. The case is ongoing and the banks have yet to be held accountable. Standard Chartered has agreed to cooperate with the Competition Commission by providing transcripts of online communications that implicate its competitors. The British International Bank has settled for 42.7 million after being accused of manipulating the rand exchange rate. In total, 27 other banks were involved in the scheme, with implications running into trillions of rand, according to the Competition Commission. The charges against the banks, both South African and international, revolved around allegations of engaging in an agreement to manipulate prices related to certain foreign currency pairs tied to the South African rand. The banks were also accused of conspiring to assist each other by allowing a trader with a significant open risk position to complete trades before others and manipulating liquidity. These actions violated competition laws and market trading practices. Other banks implicated in the scheme include Barclays Africa, BNP Paribas South Africa, Citigroup Inc., Investec Limited, Citigroup, and the Standard Bank New York Securities Incorporated, among others. The ongoing hearings at the Competition Tribunal involve both the respondent banks and the Competition Commission.
Hi Rafiwa, thanks for having me and looking forward to chatting about this one. Well, currency manipulation is effectively when a big bank or someone outside of a consumer decides to put a price on where they want a currency to be and they act accordingly. And in this case, it was collaboration by 28 big banks who basically decided they wanted the rand dollar to be in a certain range, and they ensured that was the case based on the way they acted.
Standard Chartered, admitting liability to the currency manipulation charges, agreed to pay the settlement fine. The bank has also committed to providing evidence, including instant messaging transcripts between its employees and competitors. However, it clarified that it wouldn't compel former employees involved in the scheme to testify as they left the company. Citibank had previously settled with the Competition Commission in 2017, paying 69.5 million administrative penalty for colluding with other banks in the Forex trading cartel scam. The rand manipulation by the implicated banks had widespread effects on the economy, impacting exports, imports, payment mechanisms, foreign direct investment flows, external debt, and prices of imported goods and services. Makali Muthala, the divisional manager for cartels at the Commission, revealed that from 2007 to 2018, Standard Chartered and its competitors conspired to fix bids, offers, and trades through bilateral communication, such as instant messaging.
Most of the banks that gave testimony today want the Competition Tribunal to dismiss the cases against them because of lack of evidence. They've once again argued jurisdiction, prescription, and that there's no proof that they participated in the collusive transactions. They've also argued that the matter has prescribed because it happened 3 years ago.
Standard Chartered initially offered 18 million in settlement in November 2019, which the commission rejected. Another offer of 34 million in April 2020 was also turned down before both parties agreed on the current 42.7 million settlement. Standard Chartered and the commission have proposed settling the matter with an admission of liability. The bank has committed to cooperating with the commission in the prosecution of other respondent banks and refraining from engaging in prohibited conduct in the future. The impact of the currency manipulation extends to the value of the rand, affecting various aspects of the economy, and can either advantage or disadvantage individuals depending on whether they are buyers or sellers of the currency on a given day. In the recent years, banks like Barclays and Standard Chartered have been divesting assets in some African countries. Standard Chartered, for instance, has received regulatory approvals to sell its Zimbabwe unit to local bank FBC, while Barclays has offloaded its African assets to Absa Group and other regional lenders.
The rand manipulation.
Rand manipulation.
Currency manipulation, a frequent occurrence in the intricate world of global finance, has recently gained attention due to allegations involving the South African rand.
2007 to 2013 is the scope of the Competition Commission. One of the things that the stakeholder from the Competition Commission said on Morning Live was that they have a huge backlog. That's why this case has taken so long, and it hasn't even really ended. They say it's ended. It's 8-year investigating, but it hasn't. And they were only looking in the scope of 2007 to 2013. They have not been looking at the scope of 2013 to 2023 of whether there's rand manipulation there as well. Not just with the rand to dollar, because that's also just the scope. What about the rand to pound? What about the rand to the euro? What about the rand to the yen?
To understand why banks manipulate the rand, we need to examine economic, institutional, and psychological factors. At its core, currency manipulation often stems from the desire for financial gain and a competitive edge. Banks might aim to influence exchange rates to boost profits from currency trading, international investment, and trade activities. Looking into psychology helps us grasp why banks might give into the temptation of manipulating currency values. Behavioral economics suggests that individuals, even those in financial institutions, are prone to cognitive biases and heuristics that can cloud rational decision-making. For example, the allure of short-term gains through manipulative practices may override ethical considerations or even concerns about long-term stability.
Remember that when we came out of COVID, they said the most people that have financed homes were black women.
Yes.
Right?
Yes.
So a record number that usually people keep a house, like standard number, is 13 years on a 22 or 20-year bond.
Yeah.
Now it's reduced to 2 years. We're like, I can't do this anymore. So what does it tell you about what's been going on now with the rand manipulation thing? So Tina, we take things lightly. Now they say the eggs, then say I believe, eggs, but the price. Yeah, now the egg thing is quiet now. Now they're warning us in advance. They're saying chicken in December, eh?
The fear of missing out can be a strong psychological force, driving banks to engage in manipulative behaviors to align with industry practices, even when those practices raise ethical concerns or questions. This phenomenon, seen across various sectors, highlights the significant impact of social and industry norms on decision-making within financial institutions. The effects of currency manipulation go beyond immediate financial gains for the banks involved. The South African rand, closely tied to various aspects of the economy, can experience profound effects due to manipulation, affecting both domestic and international stakeholders. Manipulating the rand adversely affects the currency's value and stability, impacting the pricing of exports and imports. This in turn ripples through the industries relying on the international trade. Furthermore, the distortions introduced by currency manipulation can disrupt payment mechanisms, creating uncertainty for business engaged in cross-border transactions. Additionally, the dubious practices of currency manipulation can undermine the integrity of financial markets, eroding trust among investors and the public. This trust erosion has the potential to hinder economic growth and development.